Hello students. In last video we have discussed completely on depreciation theory part. Regarding that I have given information in link below, you can refer. And so as I said, so we have two methods for calculation of depreciation. First one is straight line method and second one is diminishing balance method. In today's video, let us learn how to calculate depreciation under straight line method. First one. So here is one question, that is ABC Limited purchased a computer for rupees 60,000 on 1st April 2015. It has purchased one computer for 60,000 on 1st April 2015, and at the time of purchase company spent rupees 40,000 for its installation. At the time of purchase, it spent 40,000 rupees for installation. Then, asset to be depreciated at 10% per annum means we need to calculate depreciation at the rate of 10% each year. Then, books are closed on 31st March each year. Each year, we are closing our books means we are preparing books of accounts on 31st March. Calculate depreciation for 3 years under straight line method. We need to calculate depreciation for 3 years under straight line method. This is the question. By using this question, we need to calculate depreciation for 3 years under straight line method. First, let us make the note of whatever information they have given. First one. So, we are purchasing machinery on 1st April 2015 for rupees 60,000. So it is called as cost of asset. So whatever amount you are spending for purchasing asset, we call it as purchasing price, means cost of asset. Then next one, on the same date means at the time of purchase, which means on 1st April 2015, we are spending rupees 40,000 towards installation. It is nothing but expenses on purchase. That is 40,000 we are spending. It is expenses on purchase. Now the virginal cost of asset means actual amount we spent towards that asset purchase is totally 1 lakh rupees. Is called as virginal cost. For purchasing asset, we spent 60,000. For its installation, we spent 40,000. Totally towards that asset computer, we spent totally 1 lakh rupees. This is called as virginal cost. Then each year we need to charge depreciation. We need to charge depreciation at the rate of 10%. Then this is important. The books are closed on 31st March, which means year accounting period will be 1st April of each year to 31st March. We are preparing from 1st April to 31st March. Now, we need to calculate depreciation for 3 years. We need to calculate depreciation for 3 years. So we are purchasing on 1st April 2015, which means our first accounting year will be 1st April 2015 to 31st March 2016. On the basis of this, we need to calculate further 2 more years, that is for totally 3 years. Now let us calculate till which date we need to calculate. First year will be 1st April 2015 to 31st March 2016, first year. Then next year will be 1st April 2016. After 31st March 2016, we will get next day as a 1st April. So it is next year 1st April 2016 to 31st March 2017. This is second year. Then after 31st March, we will get next day as a 1st April 2017 till 31st March 2018. This is for 3 years. Means from year to year we need to calculate depreciation. This is all information they have given in the question. By using this information, we need to calculate what? Depreciation. So we know that depreciation formula is depreciation is equal to cost of asset plus expenses on expenses on purchase minus scrap value. Here they have given depreciation rate, so we need to multiply that depreciation rate depreciation rate. So we are purchasing on 1st April 2015. On this date, that is 1st April 2015, we had totally rupees worth of 1 lakh rupees computer, that is 60,000 cost of asset plus 40,000 rupees installation expenses. Totally original cost is 1 lakh rupees. We had totally 1 lakh rupees worth of computer, but from 1st April 2015, in this question we are not selling this asset, which means we are going to use it for entire year, that is still closing period 31st March 2016. 31st March 2016. From 1st April 2015 to 31st March 2016, we are going to use this asset. Because of that usage, asset value will go to decrease, that is we call it as depreciation. If you are using asset, definitely asset value will go to decrease in the asset, we call it as depreciation. So we know the formula as mentioned here, that is totally cost of asset plus expenses, we call it as original cost. Totally here original cost is 1 lakh rupees and we don't have any scrap, into depreciation rate is 10%, that is 10 by 100, into out of 12 months. In a year we will be having 12 months. Out of that 12 months we are using entire 12 months. Here entire year we are from beginning to ending we are using, so 12 by 12. Then so totally if you are calculating this, we will get 10,000 rupees. On beginning date, we had 1 lakh rupees worth of computers, but because of its usage, so we are getting asset value is decreasing by 90,000. Finally, on closing period, now we are having only 90,000 rupees worth of asset. On closing period, whatever value is remaining, that is called as book value. This book value we are going to mention in balance sheet, books of accounts. That's why it is called as book value. So it is for first year. So we calculated for first year, and in question they are asking for 3 years, which means further 2 more years we need to calculate. So on 31st March 2016, we are having 90,000 rupees worth of asset, which means next day, 1st April 2016. 1st April 2016, definitely we will be having 90,000 rupees worth of asset. From 1st April 2016 to 1st April 2016 to 31st March 2017. From 1st April 2016 to 31st March 2017, from beginning to closing date, we are going to use this 90,000 rupees worth of asset. Because of its usage, asset value will decrease. That is called as depreciation. Depreciation. And the thing is, a difference between straight line method and diminishing balance method. Straight line method, whether it is first year, second year, third year, whatever it is, always we need to take original cost, means cost of asset plus expenses for calculation of depreciation. But under diminishing balance method, we need to take book value. That is the difference. That's why your depreciation amount always remains same from year to year under straight line method, because each year you are taking only original cost. But in diminishing balance method, your depreciation amount from each year it will go to decrease, because you are going to take book value which is decreased by depreciation. Here the original cost is 1 lakh rupees into 10% of depreciation rate into out of 12 months we are using entire 12 months, then depreciation amount will be 10,000 again. See, straight line method. Your depreciation amount will remain same from one year to another year. It is for second year. So beginning we had 90,000 rupees worth of asset, but because of its usage, it is decreased by 10,000. On closing period, we are having just 80,000 rupees worth of asset. On 31st March 2017, we are having just 80,000 rupees worth of computers. This is called as book value for second year closing period. Then we have calculated for 2 years, which means further 1 year we need to calculate. After 31st March 2017, next day, 1st April 2017, it will become next financial year, means accounting year. From 1st April 2017, we are having 80,000 rupees worth of asset. This asset we are going to use it, and we are not selling this asset, which means till 31st March 2018 we are going to use this asset. Then again asset value will decrease. That is called as depreciation. On beginning date we are having 80,000. This is called as book value. In diminishing we need to take, but in straight line always we need to take original cost of asset plus expenses, that is 1 lakh into depreciation rate is 10%, 10 by 100 into, out of 12 months we are using entire 12 months, then depreciation amount will come 10,000 rupees. See, first year 10,000 rupees, second year 10,000 rupees, and third year also 10,000 rupees. It is same. That's why it is called as straight line method. Then on beginning date we had 80,000 rupees worth of asset, but it's because of its usage it is reduced by 10,000. On closing date presently we are having just 70,000 rupees worth of asset. This is called as book value. Totally, we are having depreciation fund of 30,000 for 3 years. Because of depreciation, our asset value is decreased from 1 lakh to 70,000. Presently, on closing period, we are having 70,000 rupees. Under straight line method, we need to follow this method. This is all about calculation of depreciation under straight line method. Thank you.